Welcome to our discussion on high-yield dividend stocks, a popular strategy for securing passive income. Now, let's set the stage. Imagine a world where your money is working for you, even while you sleep. This is the allure of high-yield dividend stocks. These are the stocks that not only appreciate in value but also pay you a portion of their earnings, known as dividends. Historically, dividend-paying stocks in the S&P 500 have delivered an average annual return of 9.18%. That's over twice the return of their non-dividend counterparts, which average at 3.95%. So whether you're a seasoned investor or just getting started, high-yield dividend stocks offer a compelling opportunity for steady passive income. And if you're enjoying the conversation so far, don't forget to engage with us. Hit that like button, subscribe to our channel, and comment below with your favorite stock. Stick around as we delve into the details of three phenomenal high-yield dividend stocks. First on our list is Aries Capital, a business development company with a noteworthy 9.7% dividend yield. This isn't just a number plucked out of thin air. It's the result of a meticulously curated and diverse portfolio of middle-market companies. Aries Capital isn't your run-of-the-mill investment firm. It thrives on diversity, and this is evident in the broad range of industries it has invested in. From technology and healthcare to consumer products and energy, Aries Capital has its fingers in many pies. But what sets Aries Capital apart is its consistent track record of increasing dividend payouts. This isn't a company that rests on its laurels. It's always pushing, always striving to deliver more for its investors. It's this relentless pursuit of growth that has seen its dividends increase steadily over the years. Now, let's talk numbers. In its recent trading session, Aries Capital concluded at $20.03, a slight dip of 0.25% from the previous day's close. But don't let this minor fluctuation distract you from the bigger picture. The stock market is a roller coaster, and it's the long-term trends that you should be focusing on. And with Aries Capital, the long-term trend is one of solid, consistent growth. Aries Capital isn't just about high yields, it's also about stability. It has a clear focus on non-cyclical businesses, which means it's less affected by the ups and downs of the economy. So if you're looking for a stock that offers both high returns and relative stability, Aries Capital could be the one for you. With its high yields and focus on non-cyclical businesses, Aries Capital offers potential for steady income growth. Next up is Pennant Park Floating Rate Capital, another business development company that boasts a 10.3% dividend yield. An impressive figure, wouldn't you agree? Now let's delve a little deeper and explore what makes Pennant Park so appealing to investors. Pennant Park distinguishes itself with its unique portfolio, which consists of loans with floating interest rates. This is particularly noteworthy since floating rate loans offer the potential for interest income to increase when rates rise. This unique approach provides a certain level of protection against inflation, which can erode the value of fixed-rate investments. Furthermore, the company's high yield is not only attractive, but also has the potential for steady income growth. How so, you might ask? Well, Pennant Park's focus on floating rate loans to middle-market companies allows it to generate a high level of interest income, which in turn supports its substantial dividend yield. But it's not solely about the high yield. The true allure of Pennant Park lies in its strategic focus on non-cyclical businesses. This means that irrespective of economic downturns or upswings, the company's performance remains relatively steady. The stability of its portfolio, coupled with the potential for steady income growth, makes Pennant Park an attractive proposition for long-term investment. In essence, Pennant Park Floating Rate Capital offers a unique blend of high yield and stability that is hard to come by. It's a compelling option for those seeking a robust dividend yield, and the potential for steady income growth only adds to its appeal. Pennant Park Floating Rate Capital, with its substantial dividend yield, is another compelling option for long-term investment. Last but not least, we have Realty Income, a net lease real estate investment trust with a 5.4% dividend yield. Stepping into the limelight, Realty Income, affectionately known as O, is a powerhouse in the real estate investment trust sector. Its key strength lies in its large portfolio of commercial properties. This isn't just a handful of properties we're talking about here. Realty Income's portfolio is expansive, spanning across various industries and geographic locations. This diversity not only provides a safety net against market fluctuations, but also opens up opportunities for consistent income. But wait, there's more. Realty Income is not just resting on its laurels. The company is set to acquire Spirit Realty Capital. This is an exciting development that could potentially inject even more vitality into Realty Income's already robust portfolio. This acquisition isn't just about increasing the number of properties under Realty Income's belt. It's also about enhancing its dividend payout. With more properties comes the potential for increased revenue. And with increased revenue, Realty Income could potentially boost its dividend payout. This means more passive income for investors, making Realty Income an even more appealing choice. So why should you consider Realty Income? Well, it's simple. Realty Income offers a combination of stability and potential growth. Its diverse portfolio provides a level of security, while its upcoming acquisition of Spirit Realty Capital offers the potential for increased dividends. In a world where investment risks can be as high as skyscrapers, Realty Income stands out as a beacon of stability. It's a fortress that has withstood the test of time and continues to provide investors with steady income growth. Realty Income, with its diverse portfolio and potential for increased dividend payout, is a solid choice for those seeking steady income growth. We've discussed 3 high-yield dividend stocks today, each offering unique benefits and potential for steady income growth. Let's quickly recap. Aries Capital, a business development company, offers an impressive 9.7% dividend yield, backed by a diverse portfolio of middle-market companies. Then we have Pennant Park Floating Rate Capital, another business development company, boasting a 10.3% dividend yield and a portfolio of loans with floating interest rates. Lastly, Realty Income, a net lease real estate investment trust, provides a 5.4% dividend yield, supported by a large portfolio of commercial properties. Each of these stocks has shown a history of increasing their dividend payouts, and they all present an excellent opportunity for long-term investment and steady income growth. Remember to like this video, subscribe to our channel, and leave a comment with your favorite stock. Thanks for watching, and we'll see you in our next video.